All right, and my name is Ryan Marshall, and my helper Will Barrett back here in the back, and we're both with Audit Maintenance Pro. And I think some of you probably are familiar with Audit Maintenance Pro. Nathan, in the general session yesterday, mentioned a little bit about ancillary products that they have integrated with the software. And Audit Maintenance Pro is a prepaid audit support that they have integrated in the software so that your customers can have audit protection at a low cost. And then you also can generate some revenue for your office. And we'll talk a little bit about that at the end, but we will get started. All right. People are scared to be audited. That is one big fear that people have is getting that IRS letter in the mail. So it's important to be able to help those folks. As you can see, there's a lot to discuss in this class. We have purpose of an audit, types of audits, statute of limitations, reasons for being audited, red flags, common types of IRS notices, IRS Audit Statistics, Audit Selection, rights during an audit, the do's and don'ts in the case of an IRS notice, the process of responding to IRS notices, penalties and interest and how they're calculated, tips for avoiding future problems, helpful tools in TaxSlayer Pro, and helpful publications. So, what is the purpose of an audit? Purpose of an audit is to verify or clarify items that you have reported as income or deductions on your tax return. Keeping orderly and precise records backing up income and expenses reported on a tax return will make things much less difficult in the event of an audit. You want to keep records that support income and deductions for the period of the statute of limitations pertaining to that return, which we'll go through the statute of limitations shortly. What are some of the types of audits? The most common is correspondence audits. Those are conducted by mail. They generally relate to specific items on your tax return, and they generally will relate to smaller dollar amounts. So not always, but typically for smaller dollar amounts. Then you have office audits. That's where the IRS comes to you. Those are generally done for businesses, and they don't happen often. You also have desk audits, and those are in person, and they may require going to an IRS office and meeting with an agent. Again, a little less common. Correspondence audits are much more common. And the statute of limitations, we have a 3-year statute of limitations. That's your normal assessment period. And that normal assessment period is 3 years from the due date of the return or from when the return was actually filed if it was filed late. Also 3 years for claim of refund. You have 3 years from the due date of the return or 2 years from the date the payment was made, whichever is later. 6-year statute of limitations for a substantial understatement. If a taxpayer fails to report 25% or more of his or her total income, the IRS has 6 years to create an audit assessment. For offshore accounts, this gives you 6 years to create an audit assessment if the taxpayer had a foreign asset, like a bank account, and the amount of income derived from that asset is greater than $5,000. And then for crimes, most federal tax crimes have a 6-year statute from the date of the commission of the crime. These crimes include defrauding the U.S., tax evasion, failure to pay tax, failure to file a tax return. And then for 10-year statutes on collections, IRS has 10 years from the date the tax liability is finalized to collect outstanding liabilities. Now, how is the tax liability finalized? That's the amount of tax reported on a tax return filed by the taxpayer or assessment of additional tax from an audit or a proposed assessment has become final. And then the 10-year statute of limitations on collections can be suspended. So while the IRS reviews offer and compromise, installment agreements, innocent spouse relief, collection due processing hearing, and while taxpayer is under automatic stay of bankruptcy protection plus an additional 6 months, or for periods when taxpayer resides outside of the U.S. for at least 6 months. What are the reasons for receiving an IRS letter? And these are just some of the reasons, but calculation errors, mathematical mistakes on returns. IRS records and tax return don't match. For example, amounts reported on W-2s, 1099s, 1098s, etc. are not consistent with the return. The return was not signed. So for electronically filed returns, you don't sign the return, you sign the electronic filing documents. It's less common. But if you amend a return or you're forced to mail in a return, make sure that the taxpayer signs it, make sure that the spouse, if there is one, signs it, and make sure that you as a practitioner signs it, or else they're just going to send it back. Again, that's much less common nowadays. And then you also have better chance of getting a letter for running a small business. If schedules are not correctly reported, obviously, for using round numbers, and what that means, if I put my income at $75,000 on the dot, and then my supplies say $17,000 on the dot, and then my meals and entertainment are $2,000 on the dot, you're asking for an audit, or your customer is. Now, all of us get the customer that comes in with those figures. It's a good opportunity for you to help that customer by telling them you need to go and add your actual receipts up and give me the actual figures, because if they total that, that's fine, but typically that isn't going to be the case. All the numbers are not going to be around. If they are, you're just asking to be audited. So another one's taking higher than average deductions. If deductions are disproportionately large compared with your income, and for taking large charitable deductions, you have a better chance of receiving a letter. Claiming EITC, or Earned Income Tax Credit. Those with gross income under $25,000 who claim EITC face an audit rate of 1.8% in 2014. Now, that number sounds like a very small number, 1.8%. It doesn't seem like a lot, but I'm going to show you later what the overall rate is, and it's much greater than the normal rate of audit. So it's actually a pretty substantial amount. Now, I also think that number will continue to rise, and it has risen because of the crackdown on EITC and due diligence and all that. That number is probably going to continue to rise. So make sure you do your due diligence as well. All right, what are some of the red flags that increase the chance of an audit? Now, they don't necessarily mean you will be audited, and they aren't all inclusive, but these are some of the red flags, if you will, that can increase the chance of an audit. Chances rise with income. The overall audit rate is 1 in 116. Incomes over $200,000 had an audit rate of 2.71%. That percentage rises to nearly 4% for incomes between $500,000 and $1 million. And for all of you in this class, increases to over 8% for those of you making $1 million to $5 million, right? We wish, huh? But it increases with income. So there's also deviations from the mean. Now, the IRS has systems in place that they score based on these systems. And the first one is the Discriminant Information Function, or the DIF. And what that is, that's the IRS scoring system based on deduction, credit, and exemption norms for taxpayers in each of the income brackets. The IRS does not disclose their formula, though. So basically what they do is they say people with this much income, filing this status, with these dependents, they should have, a range of this and this. But they don't disclose what it is. So it's not something set up where we can really beat the system, or even, we're not really trying to beat the system, but we're trying to help our customers get everything they can. We don't know what that formula is. We don't know the bounds to stay in necessarily, but I think most of you know, as you do taxes long enough, you kind of know what is very conservative, what's kind of middle of the road, and where people are being very aggressive. So you kind of can use your common sense a little bit, but the IRS uses this DIF function. Then you have the underreported income DIF, or the UIDIF, and that scores the return on the potential of underreported income or unreported income. And I apologize, there's a slide for it. All right, also, when a business is really a hobby, taxpayers who repeatedly report business losses increase their audit risk. Businesses have to earn a profit 3 out of the last 5 years to not be considered a hobby. So we all know that. Also, non-reporting of income. All tax documents reported to the taxpayer are required to be reported to the IRS. So they already have those documents. And individuals who overlook reported income are then easily identified. Discrepancy between X's. So with alimony, the IRS will compare submissions of alimony deducted to alimony reported as income. So if a spouse reports alimony as a deduction, they have to assign it to a social security number. The IRS will then look to make sure the person's social then reports that as income and it matches up. Also with dependents, when both former spouses attempt to claim the same dependents. And we've all had that happen before, right? Claiming rental losses. Passive activity rules disallow losses unless an individual actively participates in the property's management, or with real estate professionals who devote greater than 50% of their total working hours to this activity. And this is a deduction the IRS pays special attention to. What are some of the common types of notices? You have the CP11, changes to tax return balance due. This informs taxpayer of changes made to their return resulting in a balance due. This is the first reminder of a balance due. CP22A notifies of adjustment to the return resulting in a balance due. CP22E is adjustment to the return resulting in a balance due of $5 or more. CP75 or 75A, the IRS needs information to verify EITC claimed, Earned Income Tax Credit claimed. Then you have the CP 501, 503, and 504, which is a series of reminders of past due taxes, each becoming more threatening respectively. The last, the CP 504, is a notice of levy of intent to levy. Okay? And probably the most common, and everybody should be familiar with, the CP 2000. And what this does, IRS is proposing changes to your return based on information they received from your employer, bank, and or other third-party payers. Sometimes the IRS system is having a hard time matching items that actually were reported on your original filed return. Okay, so I think most everybody is familiar with the CP 2000. We'll go through it in a little more detail here shortly. Some other types of notices that you may see. There's notice of deficiency, which is a final notice from the IRS that they're going to make changes to your tax return, and it is usually sent out to conclude an audit. CP 49 notifies taxpayer that the IRS will use all or part of their refund to fulfill a tax debt. And then the CP 01A, that's a letter explaining that the IRS has assigned an IP PIN or an identity protection PIN to the taxpayer. This letter includes the 6-digit PIN number, which must be included on the tax return. And this isn't necessarily an audit, but we're doing how to properly handle notices. And I'll show you the IP PIN letter later, but it's becoming more and more common. We used to not see very many of them at all. Now you see several a year or even more than that. It's becoming much, much more common with identity theft becoming much, much more common. So I would have to assume that most of you in this room have seen at least one of these. And in addition to that, that 6-digit PIN has to be on the return, or what will happen? It rejects. And then you either have to have them call and get another one sent out, which takes 6 weeks or so, maybe longer, or they have to mail in the return, which also takes a long time. And these folks want their refund fast, so it hinders it. So an example of the CP 2000 notice. Again, most of you are probably familiar, but a couple of things I want to point out. First is here at the top, gives you a summary of a few things, including the tax year in question. It's very important to notice the tax year in question so that you're comparing it to the proper tax return, because a lot of times the assumption is it's the return we just filed, but it may be 2 years back. So look at the tax year that they're questioning. It also has the notice date. The notice date's important because you typically have a time frame in which to respond from that date. Okay? And then you also have a phone number and a fax number that you can call that number to get in touch with somebody if you have questions or you want to discuss it, and a fax number to send your response in. Next, you have all the taxpayer information, and then proposed changes for that tax year, and then the amount due for that proposed change. Now, obviously, amount due is in huge bold letters. Proposed, which is important, is in very small letters. So what happens is a taxpayer gets this letter, and they see amount due, oh my God, I owe this money, write them a check, send the money in. Well, make sure your customers know not to do that, to bring the letter to you, at least let you look over the letter, see what they're asking for, because the majority of the times you can either reduce or eliminate this amount due. It is a proposal, not a final decision. And then this is the billing summary, which breaks down the tax that you owe, the penalties, the interest, and it gives you a total what you owe again. Moving on to the next page of the CP 2000. You're going to have the changes that the IRS thinks need to be made to your return. So, here in the first column is what was shown on the original return, then as corrected by the IRS, and then what the difference is, and then a total for the difference. Okay? Yes, ma'am?
I just want to share with the class, on those CP2000s, I had more than 2 where shown on the return was wrong.
I have to.
Okay,
Yep.
and so I definitely encourage the clients to bring you the letter. So what I'll do is order a transcript, send the transcript back to that letter, or fax it, and be like, and write a letter saying, not sure what happened, if the numbers dropped off during transmission. But, and so that way we save the client money, because you're right. Some clients
Yes, ma'am.
be like, oh, I just want to pay it, I want to owe the IRS.
It's amazing.
The IRS system has had a glitch.
Yes, ma'am. And for so many reasons, you want them to bring it to you, just so you help them, and you can typically eliminate. But that's a great reason, because the IRS is not always right, according to who you ask. And there's typically an explanation of explaining what they've broken down here. That explanation is vague. It doesn't really explain it all the way a lot of times, but there is some sort of attempt at an explanation. And then they break down the documents that are either missing or that are in question, that don't match or whatever. And it could be one document or it could be multiple. It could move on to the next page. But that's a breakdown of what's in question. All right, just the following page. There's not a whole lot to go through here. And then the next page, and it may not be page 3, page 4. It depends on what information is on there, but these are the way that the letters are organized. So you have your next steps, what to do, penalties. In this case, there's a negligence penalty, so they have that there. Then you get to an important part, which is the response form. So, if you go through the letter with your customer and they say, yes, that's right, I left that offer, they agree with the proposed changes, then it's pretty simple. You just check the box, I agree with all the changes, have them sign and date it, and then they send the letter in with whatever amount due. Hopefully, and a lot of times, that's not the case, which then brings you to the next page where it says you do not agree with some or all of the changes. So whether you agree with some of them and you don't agree with some of them, or you disagree with the entire thing, you would check this box here at the top, have them sign and date it, and then very, very important, there has to be a letter of explanation along with this. And you have to write out why you disagree and what you disagree with. And that has to be signed by the taxpayer. Then in addition to that, send in all your supporting documentation backing that up, what you're disagreeing with. Okay? Better to have too much information than not enough, so send as much information as you can. But on that note, only send information for what is in question. Do not send additional information on stuff that isn't being questioned. And I'll kind of touch on that here shortly too. This simply is the payment voucher that'll be at the back of the letter, so you'll want to include that if you're sending a payment. And then just the last page, not really a whole lot on there. All right, example of a notice of deficiency, which is Form 4549A. Summary of the adjustments that they're making, the period in which it pertains to, and then they tally that up here in the middle of the page for the adjustments. And then they'll give you a total at the bottom. On the second page of the 4549, they'll break down the penalties and what they were calculated for there and for the tax period. And then again, they'll total that at the bottom. And then we have the CPO1A, the IP PIN, Identity Protection PIN, which is becoming more and more common. Here's an example of it. Again, a couple of very important things at the top. You want to make sure you look at the tax year that this is for and make sure it's for the correct year, because if you put in the improper PIN number, if it's a 15 IP PIN letter and you're doing a 16 return, it's not going to be the same. So pay attention to the letter. Question was asked when these letters come out. They're typically towards the end of November is when they're sent out. Okay, so your customers can start looking for them end of November, beginning of December. And then right here, where this red arrow is at the bottom, is your 6-digit IP PIN, the code that you must enter into the software or otherwise it will reject. One other thing on the IP PIN is it used to only be for taxpayer and spouse, and now dependents can be assigned an IP PIN. That did not used to be the case, and I had that case arise and I didn't realize it, and then I called the IRS. They had not been briefed on it and they didn't realize it, and the guy researched it, and so dependents can now get IP PINs as well. When you submit a return that you did not include the IP PIN when it should have been on the return, the reject code will tell you that is what it's for, but it'll also give you the social security number of who that IP PIN should be assigned to. So pay attention to that reject so that you're not trying to tell the taxpayer that they owe you an IP PIN when it's really a dependent. Okay? All right, IRS Audit Notice Statistics. So the IRS has something called the IRS Data Book. It's published annually by them, and it contains statistical tables and organizational information on a fiscal year basis. It also provides data on collecting revenue, issuing refunds, enforcing the law, assisting the taxpayer, and the budget and workforce. So it's got a lot of really interesting information. It's amazing what they can figure out based on tax returns and numbers. So how many people, and this comes from this IRS data book, how many people are audited annually? Almost 1.2 million individual income tax returns were audited in 2016 for 2015 returns. 0.7% of individual filers are subject to an IRS audit based on the 2016 data book. That equates to 1 in 116 households that file a return. Now, earlier I told you about the rate at which EITC returns are audited at 1.8%. The overall rate is 0.7, so as you can see, it's a much, much greater rate that they're auditing EITC. Now, in addition to that, I feel like it's going to continue to go up. With all their focus on due diligence and focus on EITC, that percentage is probably even going to go up from that 1.8%. So the 0.7% is a 1.1% decline from 2014 and almost a 22.3% drop from 2010. So believe it or not, the audit rate is dropping a little bit year after year. I think some of that has to do with budget cuts probably, and then they cut their staff, and if you're going to send a letter or an audit, you have to have staff to support it, and you have to have people to generate the letters. So with a cut in their budget and a cut in their staff, it probably is what is equating to some of this reduction in the percentage of people that are audited. All right, in 2016, for 2015 returns, the IRS sent almost 1.7 million notices to taxpayers for just over 2.1 million math errors identified on their return. For tax year 2016, math errors associated with calculation of income or other taxes made up 36.2% of the total math errors. For tax year 2014 and prior years, misreporting the number and amount of exemptions was the most common error, making up 25.5% of the total. So there's a bit of a shift there on what the most common question returns are. Now, how are these audits carried out by the IRS? 70.7% of fiscal year 2016 audits were done via correspondence or mail letters and notices. The remaining 29.3% were conducted in the field. Now, that's a little surprising to me. I would have thought that the number of notices, the percentage of correspondence audits would have been much greater than that, but it's still a pretty high percent compared to field audits. And how many people disagree with an audit? And this is fascinating. In 2016, of the almost 1.2 million examinations of tax returns, nearly 29,000 taxpayers did not agree with the IRS examiner's determination. That's 2.41%. That's it. That's a very, very small number of people that disagreed. In my opinion, people get the letter, they get scared, they say they don't want the IRS messing with them, and they send the money in. That's where it's our job as tax professionals to make sure that they know if you get a letter, at least bring it in, at least let us look at it, because I do over 700 returns during tax season, and I'm going to have customers get letters. It doesn't mean that they made a mistake. It doesn't mean that I made a mistake. It doesn't mean that neither of those happened, but I make sure that they know that they can come in and see me, and I'll look at the letter and evaluate it. The majority of them if I can't eliminate the tax penalties and interest, I can at least reduce it. So that 2.41% that fight it, it needs to be much greater than that, because it's just leaving tax dollars on the table. So, and that's one of the things that Audit Maintenance Pro is great for, is if you guys utilize us and make sure that your customers contact us, you guys generate revenue without having to do the work, and our enrolled agents, CPAs, will help them through the process and try to recover some of their tax dollars. So, and this equated to an unagreed recommended additional tax of about $12.2 billion. So it can be significant. And gross IRS collections in thousands of dollars. I won't go through all these years, but as you can see, every 10 years and over the past several years, those collections go up, 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 up. And it's a big difference from what was collected in the 70s. Audit selection. Now, just because you're selected for an audit does not always suggest that an error has been made. Returns are selected for so many different reasons. There's random selection. So whether you do a great job on returns or you do a poor job on returns, you're not eliminated from the possibility of having your customers audited, because there is some random selection out there. They do computer screenings. Returns can be selected based solely on statistical formulas. That DIF and UIDIF, they run these figures and they'll generate letters based on what's on the return. Document matching, when payer records such as W-2s and 1099s don't match the information reported. And then related exams. Returns may be selected for audit when they involve issues or transactions with other taxpayers, such as business partners or investors, whose returns were also selected for review. And we want to go over what the taxpayers' rights are during an audit. They have a right to professional and courteous treatment by the IRS employees, which we always get, right? No?
Yes.
Not. Yeah, we get some rough ones. Right to privacy and confidentiality about tax matters. Right to know why the IRS is asking for information, how they will use that information, and what will happen if the requested information is not reported. They have right to representation either by themselves or an authorized representative. They also have the right to appeal disagreements both within the IRS and before the courts. Now, if they don't get the treatment that they think they should be getting by the person who is in charge of their case, you can always request a different representative. Okay, so if you don't feel like you're getting anywhere, you can always request a new one until you find one that's helpful. So what are the dues of when you receive, or when a taxpayer receives an audit? Do act quickly, do stay calm, do read the notice entirely, do call if you have questions, decide how to respond, gather the records asked for by the IRS, and pay the amount you owe as quickly as possible if there is one. And I'm going to go through each of these individually. So, do act quickly. The IRS will give you a certain deadline to respond. Make sure that you meet it in your response. The deadline to respond to the notice is oftentimes within 30 days. Paying the amount due. Typically, you are given 90 days to pay the entire amount due. Missing response deadlines could make your case worse. Payment agreements can be set up, but be aware of the additional costs, which include the fee to set up, interest charges, penalties that can be associated with that. So whenever you do a payment agreement, a misconception is that it stops penalties and interest and it's a better situation because you only have to pay a little bit at a time. Well, some people are forced to do that based on their financial situation, but there's a large dollar amount to set up, just to set it up. And then you make these small payments and it's just like a mortgage or a car payment or anything else. It's accruing interest, but in addition to that, it's accruing penalties still on anything unpaid. So please make sure if somebody mentions a payment plan that you explain that to them so that you don't cost them, undue tax dollars. Stay calm. Panic will not decrease your tax liability, and panic can lead to choosing not to deal with the issue, which can lead to owing additional money. And it seems pretty simple, and you're as tax professionals, you kind of wonder why anybody would panic, but again, it's one of the biggest fears that they have. And when they get that letter, a lot of times when people get something that causes them anxiety, they push it away and they don't deal with the issue. So make sure they're aware that if they just throw that letter to the side, it's not going to go away. It's not going to go away. They need to deal with it and act calmly, but deal with the issue. Also, read the notice entirely. Check the tax year on the notice, as I stated earlier. The notice will give specific instructions on what to do to resolve the problem. Follow these directions carefully. And the notice will explain what you do if you disagree or agree with the items in question. Call if you have questions. There will be a number listed on the notice, and you can always call that number. It's not always the easiest to get through to, but it's typically a little bit easier to get through on that number than it is to get through on the 829-1040 number, the normal IRS number. If you call and you sit there on hold and you get frustrated, don't hang up. You may, in parentheses I put will, because you will be put on hold. If you hang up and try to call back, you'll be placed right at the back of the line. You'll have to hold in addition. Be ready to write down information given over the phone. You want to document your conversations, the date, the time. You want to document what you spoke about. And then I also put down here the Tax Practitioner Hotline, which typically is a little bit easier to get through. It's in your presentation. If you want to write it down real quick, that number is 866-860-4259. And we found a lot of success getting through to somebody on that number. A lot of times they're a little more helpful, a little nicer to deal with. So utilize that Tax Practitioner Hotline. Ma'am? No, that's a that's for you as a practitioner. That's just for practitioners. They won't field calls from a taxpayer. Well, that's a general rule. After tax season, it seems they cut their staff, and it's hard to get through to anybody, but you have more success with the Tax Practitioner Hotline. In addition to that, if you call first thing in the morning, 7:30 in the morning or 8 in the morning, you have a little bit better chance of getting through to them. If you call at noon or 2 in the afternoon, you may never get through to them. So, a couple of tricks for the trade, but they're not easy to get through to. So we want you to have every advantage to be able to get through to them as you can. All right, decide how to respond if you disagree. Gather supporting documentation, which include receipts, logbooks, bank statements, etc. Submit those supporting documents, written letter, and copy of notice showing you disagree with some or all of the findings to the appropriate location, whether it be the fax number on the letter or the address. And you'll be contacted by mail with a response to your appeal. Keep in mind, this does not stop interest and penalties from accruing if they still have an amount due. Yes, ma'am.
I have a quick question.
Okay.
Do you know the form that you file, or what do you suggest to evade penalties for failure to file?
The failure to file to abate it? I don't remember the form number. So what used to happen is if somebody got a penalty of any type really, you could pretty much call if it was their first offense, so to speak. You could pretty much call, and a lot of times you can get that penalty abated. Now, they won't get rid of interest, that's by law, but a lot of times you can get the penalty abated, at least the initial time. Now, now they make you fill out that form you're talking about, and 843. That sounds right. Form 843, and then you fill that form out and give a written explanation of why you think it should be abated and reasonable cause and everything, and then they'll decide. I've had pretty good success, and I've had where my initial request is denied, but then I go back again and I'm able to, after I submit that form and letter, I can talk to somebody and they can say, oh, okay, you're right, we'll abate it. So don't give up on first try
Try sometime 3 times. depending
or
on
more.
who's needed.
That's right. You're absolutely right. Yes, sir.
And on the 843, to the regular place, because on the 843, don't tell you where to mail it to or what office send it to. They accept the form. They drop the penalty and the interest, but if you look at that form, it doesn't tell you where to send it.
Right.
So just send it like you would a regular tax. The 843 do not have address. We
Gotcha.
call, we look, we ask them. I can call IRS and they say, we don't know.
Yeah.
Once they got it, they drop the penalty and the interest.
Really? Okay.
And then send the letter, say, we thank you for allowing
Submitting.
us to do something.
Right.
It's a nice letter.
That's
but
good.
On that form, it doesn't tell you where to mail it
So
to.
you just mail it like you mail it to 40,
So it
to
is.
Kansas.
And did everyone hear that? That's good information to know that you'll just mail that form where the original return was supposed to be mailed if it was mailed in. So if you agree to the changes proposed, check the box that you agree with the changes, sign and have the taxpayer and spouse, if there is one, sign and date in the proper places, mail in your response. If there's an amount due, mail in your payment with the response form as quickly as possible to avoid additional penalties and interest. Okay? It's pretty plain and simple. If they know or they agree with the changes, you know what to do. Do gather records asked for by the IRS. Get organized. And that's one of the biggest, and it seems, again, simple, but that's one of the biggest things is if somebody has a bunch of receipts all over their house and they're disorganized, it's going to be much tougher for them to fight this audit. So you want to try to help them get organized. And you can't do it for them all the time. And it's hard to get people to be organized. But at least portray that to them that, hey, you know, with all these expenses and all this income that you're reporting, go ahead and have your ducks in a row in case you're audited. Because if you wait 2 years, you're not going to know where to find this stuff. So go ahead and have it organized. So have them stay organized. The more proof, and again, proof for that specific thing in question, the better. Supporting documents include receipts, deposit slips, canceled checks, bank statements or records, and logbooks. So if you're a Schedule C and or you know a contractor or whatever, and you have logbooks for your expenses, and that's all you submit, you have a less chance of winning that audit than if you have the logbook and receipts. So submit as much of the pertinent information as you can. Now, the audit don'ts, or if you receive a letter, what not to do. Don't ignore the notice. Don't assume the proposed changes are final. Don't panic, and we won't beat a dead horse, but we'll go through the panic thing again. Don't give unnecessary information, and do not discard documentation associated with your tax return or audit. Don't ignore the notice. If you don't respond, you're already starting off on the wrong foot. So IRS sees that they've sent you 3 letters as opposed to you responding after the first. And by human nature, they're going to be a little more hesitant to help you. Don't assume the proposed changes are final. And we kind of touched on it, but an audit is to verify or clarify items that you have reported as income or deductions on your tax return, but not final. Initial correspondence is not typically a bill. Most notices are generic, computer-generated letters asking for more information or proof of submitted information. So again, they're not telling you that you definitely owe this money or that you definitely made this mistake. They are proposing that, and you have the right to challenge it. Don't panic. Don't become angry or rude, because the IRS representatives, a lot of time, they have short fuses. If you get angry at them, then they're going to just stop helping you. I mean, that's what I've experienced, because it's frustrating. And I've gotten frustrated before trying to help people, frustrated with my IRS representative. And when I start to show any kind of attitude to them, they shut it off. They aren't helping you anymore. And then, of course, you can always ask for a new representative if you're not happy. And you don't really have to give any explanation why. You can just say, look, I'm not happy with the way this is going. I'd like to be assigned a new representative or a new IRS person. And they have to, you have the right to do that, so they have to grant that. Okay? Yes, sir.
I had one auditor come to my office and very unexperienced. He's being trained by another auditor. And so I'm trying to do what you were saying.
Right. And what steps have you taken? Have you called to try to get a new auditor?
No, because the supervisor only came the first day and never showed up.
So the supervisor came with this new training employee? Yeah. Yeah, I would probably, well, it depends. Yeah. And that's what I was going to say is if they're inexperienced, you may be able to coax them into, what benefits you.
He clearly stated that he had just come back from a training from Texas.
Yeah. Now, if you don't get the results that you think you should, then you should definitely get a new, request a new auditor. But if it's a newer person that's more lenient, then you may want to stick with them. Now, I will tell you, they're trained to not leave your office before they give you some sort of something. I mean, they're even if you have it perfect, they're trained to find something, unfortunately. So, and again, although the process may become frustrating, an angry auditor may not be as helpful in negotiating possible findings. Don't give unnecessary information. Only address the issues in question. And this is a common mistake. You get an audit for one specific item and then you start throwing all your stuff at them. Well, if you're audited for itemized deductions with charitable contributions, then only send them your charitable contribution backup stuff. Don't start sending them your documentation for your Schedule C, or else they're going to go, I need to look at this. What's going on over here? Additional information can only broaden the audit. Now, you do want to give as much information to that specific item in question. Now, don't get me wrong there. You want to give as much information backing it up, but you don't want to give information on additional stuff. Don't discard documentation associated with your tax return or audit. Keep copies of all documentation supporting items on your tax return. Keep copies of all documentation supporting items submitted to the IRS in response to an audit. And this applies whether you agree or disagree with the IRS findings. Now, this is important because a lot of people, though, we'll walk them through the audit, we'll win it, we'll get everything eliminated, and they'll go, all right, and they'll get rid of everything. Well, then 3 months later, they get another letter saying exactly what the original letter said. You have to go through the whole process again, which it isn't really fair to us as practitioners. It's not really fair to the taxpayer as a taxpayer. But that's why it's so important to document your conversations, document everything, and then keep all that documentation in the case that you think you have it figured out, you get it squared away, and then surprisingly it doesn't ever get handled on their end. And you have to go through the process again, because I've had it happen many times. Yes, ma'am.
Do you know if they accept they have apps now for mileage trackers?
That's a good question. And
it creates like a report,
they-
if it's work or personal?
they do typically. It probably depends on which ones you use, but Mile IQ, I know that they accept. I don't know about the others so much, but I tell you, most people don't have anything. They come in and they just give you a mileage. And you tell them you need a mileage log if you're audited. Well, that goes in, out, And so it's a good idea to advise them to have some sort of mileage documentation. And worst case scenario is the IRS denies that, but they have the data to go back and make a retroactive mileage log, which you're allowed to do. You're allowed to retroactively go back and create your mileage log, so their Mile IQ or whatever they use, they can go back and create it. And that is acceptable by the IRS for sure. It's a lot of work creating that, but they'll accept it. I mean, I think they like that because it's pretty clear cut. All right. What is the process when you get a letter? Read the notice completely and thoroughly. I'll go over responding to the notice, contesting the audit, what are the steps, and the Form 2848 power of attorney. I'll go through that as well. See how we're doing on time. We're doing pretty good. We got to get you out at 12:05 for lunch, so got a good bit left to cover. I'm going to kind of scoot through it. So read your notice completely and thoroughly. Determine what's in question. Decide if you agree or disagree after careful review. Take note of the time frame in which you have to respond or pay a balance due. For you guys, that's important because they're not going to get the letter on Monday and bring it to you on Monday. They're going to get it on Monday. They're going to open it on Friday, and they're going to bring it to you 2 years later. No, months later or weeks later. So try to stay in the desired time frame and respond within that given time frame, or if you can't, as quickly as possible. If agreeing with all changes, fill out IRS correspondence properly, submit the correspondence and payment due, if any, within the given time frame in order to avoid penalties, interest, and other fees. So that seems like pretty much common sense. If they agree with the changes, tell them to pay it, get it done as quickly as possible so they don't accrue other fees. If disagreeing with all or some of the changes, again, fill out the correspondence properly, submit IRS correspondence along with organized documentation supporting your proposed disagreement, and do not submit a shoebox of receipts. So, and being funny, but a lot of people, especially self-employed individuals, they'll come in, they'll bring you their summary of all their income and expenses. They'll put on there and say, okay, you know, just being a Schedule C and being on a Schedule C, you have a higher rate of getting questioned or audited. So please make sure you have your ducks in a row, make sure you have the documentation to support these items that you provided. Burden of proof is on the taxpayer. And then they say, well, I have it all in a box in my closet. If they question me, I'm going to tell them they can go to their door. They're probably not going to do that, but that's what they say. So the biggest thing is just have them stay organized. All right, when you want to contest the audit, what are the steps? If you submit documentation, the IRS decides to impose a deficiency, you do have options. You usually have 30 days to protest, and that may lead to conference with the appeals office within the IRS. If the IRS still thinks the money is owed, you can still disagree. So just because they disagree with you one time doesn't mean it's finalized still. This will usually set off a statutory notice of deficiency, which that allows 90 days to file a petition with the U.S. Tax Court. At this point, unfortunately, the taxpayer then has to weigh the cost of legal representation with the amount owed. So if it's a very large amount that they owe and they still think that they should not owe it, then they're probably going to want to continue fighting it. Unfortunately, if they owe a couple $100 and it's going to cost them more than that to contest it, then they're better off paying the amount due. And I hate to say that because I hate to leave tax dollars on the table, but you don't want them spending $500 for somebody to help them through the audit to recover $300, unfortunately. But that's not to say they can't continue the process themselves if they want to, and that may be the option of the way to go if it's a smaller amount. All right, you may hire a tax attorney, CPA, enrolled agent, or tax professional to assist in handling your case. Costs for contesting audits vary greatly based on several factors, and I was hoping to have kind of a range of what people charge to contest audits for you so that you can kind of go off of that to base your charges. But it's based on such a variety of things. Geographic location comes into play, complexity of the audit, time that has to be spent on the audit, and then the level of expertise of the person or company hired. So whether it's a CPA, an EA, an attorney, or just a tax practitioner, or a big firm versus a small mom and pop's firm may be a difference in charge. So varies greatly. In my experience, $80 to $100 an hour is typically kind of a set standard charge.
So what does Rose Murphy tell us?
Honestly, it depends, and it depends on the circumstance, and it varies. Well, it's more based on the complexity, how much time. It's not an actual hourly charge, but it typically equates to how much time we have to spend and what it is.
The CPAs and the attorneys normally charge like $250 an hour.
Yeah, they're a lot more typically. So it's a hard question to answer what you should charge, and it's a hard question to answer what we charge. A lot of our customers, if it's pretty simple, we won't charge them anything, and we'll try to just keep them happy, because what that does is it creates client retention with us, and it builds credibility with us, and so it's really a case-by-case basis. In order for the IRS to allow a third party to discuss any information pertaining to your tax return or audit, the 2848 power of attorney must be submitted to the IRS. And 2848 power of attorney allows for third-party representation before the IRS, and you will be assigned a CAF number, which is a 9-digit number assigned the first time you file a third-party authorization with the IRS. So the first time you submit the power of attorney, you'll leave the CAF number blank. They will then send a letter informing you of your assigned number. Once you are assigned a CAF number, you must include it on all 2848 submissions from that point forward. Okay? And I'm going to show you where that is. This is the 2848. Most of you are probably familiar with it. The first arrow points to where the taxpayer fills out their information. Next is the representative, the person representing them, their information. Right there is your CAF number. So the first submission, you're going to leave it blank. They'll send it back. After that, every time that you do a 2848, you're going to have that CAF number.
Marshall, do you recommend getting everybody in your office a CAF number?
If they're going to be handling audits, I mean, it's when you submit your first 2848. So I wouldn't necessarily have anybody apply for it unless their first time they need it, they submit that form, and then they'll be assigned one. Just make sure they keep up with it after that. Yes, sir.
Very important on the 2848. Make the little mark that you get copies.
Okay. Yep.
A lot of people forget.
Yep. That's a good point. Mr. Schwinn said, on the 2848, make sure you mark that you want copies of everything. And then they got to sign. Yes.
On the 2848, you can actually make one for the individual or the business. That way your workers you also use that number for the business to represent. So that's what.
So you can use a CAF just for the business.
You can have one for the business or the individual. So if you want someone to respond to all of that, you can one for the business.
And how long does it take to get?
I think it's probably about 3 weeks is what mine took, I think. Yeah, but it doesn't stop you from getting granted power of attorney for that first submission. So,
Depending on their
yeah, you can. I left mine blank. I just left it blank, and then they assigned it, because they'll have records whether you've applied for one or not. And then make sure that they sign it and date it. And then there's the Declaration of Representative, which it asks you in very fine print. I'm not currently suspended or disbarred. I am subject to regulations in Circular 230. I am authorized to represent the individual. And then it also has you give your designation. I am one of the following. And A is attorney, B CPA, C enrolled agent, and so on down the line. So what you'll do is down here at the bottom arrow, I'm an enrolled agent. I'll put C and fill out my information. Okay? Penalties and interest. How is interest calculated? Interest is calculated on unpaid taxes from the due date of the return until the date paid. Interest is the federal short-term rate plus 3% of unpaid tax. Federal short-term rate is determined every 3 months. Interest is compounded daily. The IRS generally will not abate interest charges on past due taxes. How are penalties calculated? If you owe the IRS a balance, the penalty is calculated as 0.5% of the amount you owe for each month or partial month you're late, up to a maximum of 25%. The late penalty increases to 1% per month if your taxes remain unpaid 10 days after the IRS issues a notice to levy property. Okay? The IRS may, and I say may, abate penalties if you have reasonable cause and the failure to pay was not due to willful neglect. Again, they're a little bit tougher on that now. They make you submit in writing, send the form in, but a lot of times you can get it abated. You may have to work at it, but you can get it abated. Some tips for avoiding future problems. Keep accurate records. Wait for all of your income documents before filing your tax return, which these people come in to get refunds quickly, and they may have left a W-2, or so you want to make sure that you do have all your documents. Check the records you get from employers, banks, mortgage company, and other sources, W-2s, 1099s, 1098s, etc., to make sure they are correct and accurate. Include all income on your tax return. Follow instructions on how to report income, expenses, and deductions. File an amended return if any information is received after filing, or if any information reported on the original return was not accurate. And I definitely want to get to this. We have about 15 minutes, so I want to go through the helpful tools in TaxSlayer Pro. TaxSlayer Pro was designed by tax professionals. So they've done a really, really good job of putting some great tools in the software to help you not only eliminate or reduce the chances of your customers being audited, but they also help you as a tax practitioner with some things that I'm going to go through. Okay? So please take advantage of these. One is the F10 function. By a show of hands, how many of you use the F10 function? I encourage everyone to use the F10 function. What that is, it is throughout the program. Something TaxSlayer put in. In this case, I'm going to show you in a Schedule C. So we create a Schedule C. That's the Schedule C we're going to go into. We're going to go into the Expenses menu, which breaks down the expense section of the Schedule C. So this particular person has supplies. They may have supplies broken down by Lowe's, Home Depot, Walmart, several other ones. Well, if you go into the supplies menu, it's just going to give you a box to put a total dollar amount, right? And a lot of people just put the total dollar amount. Well, when that customer gets a letter and they come in and they say, well, where did you get this figure? And you say, well, you gave it to me. You have to backtrack and you have to figure out where that total came from. So if you go into supplies and then you hit the F10 function, it's going to give you this box where you would select new. Then you can break it down. Lowe's supplies, $4,708. Home Depot supplies, $2,127. Walmart supplies, etc. And you can do as many as you want. This is throughout the program. It's not just in Schedule C. It's not just in the supply section of the expense, but it's throughout the program. So what happens is if the person comes in the following year and they're giving you their mortgage interest, well, if they had 3 mortgages the year before and you just put a total dollar amount of mortgage interest, if they bring you one statement this year, they may be shorting themselves on 2 other mortgage interest statements. If you have it broken down, Wells Fargo, Chase, Bank of America, and they bring in the Wells Fargo, you can say, well, Mr. or Mrs. Smith, do you still have the mortgage through Chase? Do you still have the mortgage through Bank of America? And they go, no, we got rid of those properties, and then you have a whole nother thing to go through. But if they say, oh, yeah, we still do have those, then you've just validated yourself. And you saved them tax dollars that make it worth them coming to you to prepare their return. And you let them know that.
I know, right? That's
Right.
part of your comparison.
That's right. Well, that's, who said that? Who said prior year? Yeah. I like the prior year comparison. I'll get there. But anyway, so there's Lowe's, supplies, and then it totals it. All right, the next thing is prepare notes. This is pretty important for a couple different reasons, but this is a good thing for you as a preparer. These don't get shown to the taxpayer necessarily, and they don't get sent to the IRS, but they are a good tool for you. So when you click on that yellow sticky note at the top, it gives you a box that you can type in. In this case, I typed in taxpayer did not provide a mileage log at the time of preparation for miles claimed on his Schedule C. Advised that he will need one if the IRS were to ask for proof of his mileage. He assured that he has one at home. Okay, so I made my notes. When he comes in, he says, well, where'd you get that mileage from? I say, well, you gave it to me. No, I didn't give you that mileage. Well, I actually had notes where I said that you provided me the mileage, but not a mileage log. You need to have that to support this number that you gave me. And that helps you. Now, here's another thing that doesn't have anything to do with audits, but it may help you with these notes. So the person came to you this past year in 2016, and they had you do their return, and you finalized it. They never came and paid you. They come in this upcoming tax season, and in the prior year, you went back in your notes here and said, customer owes $175 for 2016 return. And you have show when entering return. When you create the return for the new year, it's going to ask, do you want to pull the notes forward? Yes, you do. It's going to pop up in your face that they owe you $175. And you stop right there and you go, well, Mrs. Smith, I still have your last year's return and you didn't pay the $175. Do you want to go ahead and take care of that? Well, yes, I do. I forgot. I'll go ahead and do it. And then you collect and you generate your revenue. Or they say, well, no, I don't want to pay that. And then you get into a conversation as to why and are they going to pay you this year? And maybe you collect it up front this year to do their return. So it's a helpful tool. It's a very helpful tool. And then again, you can show when entering or exiting or both of the return. Diagnostic warnings in the program. You have diagnostics that show a red bar there. There's something that has to be changed in order for the return to be able to be accepted for e-file. But there's also these gray diagnostic warnings. And they're kind of like suggestions. They're things that tax layers built in to try to help you not make mistakes on a return. So please pay attention to them. Okay? In this example, the return contains EIC. There are no due diligence notes in the program. Please make your due diligence notes. Now, that's pretty much required, so I was going to tell you. And now we're to the prior year comparison that we love. Please take advantage of this. This is in your View Results menu. Go to prior year comparison. If it's a returning customer, it'll give you up to 3-year comparison. And in this case, this is great because I can tell my customer that, hey, last year you had $709 of interest. This year you didn't provide me with any of it. Oh, I don't remember that. Well, you know what? Guess what? I F10 function that, and I have Bank of America, Wells Fargo interest, and then I can explain to them what it is. Do you still have those accounts? Yes, I do. Well, then you may need to go find out if you have a 1099 interest or dividends or whatever. Or, no, I close those accounts at the end of that year. I don't have that anymore. Same thing with they had business income or they had student loan interest. Do you still have those accounts? No, I paid it off. Yes, I do. And you've helped save them tax dollars.
Where do you pull that?
View results. From the main menu, you had the little box at the top left, blue menu box. I think it's number 11 is view results. And then in there is the prior year comparison. Oh, skipped over the most important part, which is Audit Maintenance Pro. That's who we are. What we are is a prepaid audit support. Nathan touched on us a little bit last year as to what we are, in the general session as to what we are. And we're one of their ancillary products that they've built into the program. And basically your customers can get audit protection for one low cost as opposed to have to pay that $80 to $100 if they get a letter. And a lot of people are willing to do it because they're so nervous about getting a letter and they want to make sure they have somebody to back them up. A lot of you do your own audit support. If you do it, that's great. But you spend a lot of time probably doing it on each one. So you can eliminate the time you spend doing it without eliminating your revenue, because you do get a portion of that comes to you. That way you don't have to spend the time, or if you close your office in the off season, you still have that revenue generated by the number of products you've sold, and your customers still get taken care of, and every one of our representatives is an enrolled agent or an EA or a CPA, so they get great assistance, and you make sure they're still cared for, and they're done for a low cost of $39.99. So if you would like more information, or if you'd like to take advantage of it, you sign up now right through your My Account in the TaxSlayer Pro website. Your My Account, when you update, you go to Bank Product Info, and then you'll go to the Ancillary Product tab, and then you'll select Audit Maintenance Pro. We also have a table set up right here outside this door if you'd like more information. And then this is our contact information. And then we have a couple of publications and resources that are helpful for you. The data book, Pub 1, Pub 556, Pub 594. And I know it's time for lunch. We got a few minutes. If you will, please make an evaluation for us.